Okay. Last week we started the lesson, the bank customer relationship, and we discussed up to certain level. Today we have to start from here. That is a duty to honor the customer's check under the banker customer relationship. Banker's duty. Third duty of the banker to honor the customer's checks. When we say the bank has a duty to honor the customer's check, that duty of the bank is subject to certain qualifications. Now, what are those qualifications, or what are those conditions? Conditions that the customer has to fulfill. We'll see. The bank has a duty to honor the customer's check if these conditions are fulfilled. Number one, if the check is drawn in the proper form. As you are aware, when a current account is open, the banks give us terms and conditions which apply to the operations of the current account. So one of those conditions is the customer has to write the check or issue the check in the given format. The format checkbooks are given by the bank. So the customer has to write the check in the given form or given check leaf. So first, number one is the check has to be in the proper form. It has to be signed by the drawer, and all the features should be there in the check. So in other words, there has to be a valid check, for the payment. Number one. Number two, when the funds, sufficient funds available should be available in the account, or the bank has to give an OD. So when we say this overdraft, when we say this, if sufficient funds available in the account, then the bank or even the bank has granted a limit, overdraft limit, then the bank is obliged, or bank has a duty to honor the customer's check. However, when sufficient funds are not available in the account, or if overdraft is not given, then in a situation like that, if a check is presented to the bank by the customer, a proper check is presented to the account for the payment, then bank has a discretion. Bank has a discretion to honor the check. The first thing the bank can do is bank can return the check, because sufficient funds are not available. So you can put the seal, refer to drawer, and return the check. That is one discretion or one option available to the bank. The other option is the bank can pay the check by overdrawing the account, even though that the limit has not marked. The overdraft limit is not marked. The bank has under the banker customer relationship, under the banking law, the bank can overdraw the customer's account and pay the check. That is a second option available to the bank. So check is considered as an order given by the customer to pay certain sum of money. So order is given by the account holder to the bank, so that the bank, if bank obey the order, then the bank has to overdraw the account unless sufficient funds is available in the account. So therefore, there are two options to the bank when sufficient funds are not available in the account. That is to reject the account, to reject the check or dishonor the check, or pay the check by overdrawing the account. That is one point. Then if a valid check is presented, if sufficient funds are available in the account or overdraft is given, then the third point, if there is no legal barrier to pay. What does it mean? Now, before we pay a check, we we check certain things before we pay the check. So number one is we have to check whether the check is legally valid, or whether the check has been issued in the proper form. Number two, we check whether there is sufficient funds in the account. Number three, we have to check whether there is a legal barrier to pay. Now, what are the legal barriers that we know? You may have seen sometimes the court issue order. It could be an enjoining order, or it could be a magistrate court order to seize the account or stop the payment of a check. So in a situation like that, that is a clear barrier to pay. So therefore, the bank cannot pay even though the check is valid, even though the sufficient funds are available in the account. Or a customer himself can give instructions to the bank to stop the account, rather stop the payment. So we say it's countermanding. The customer can countermand the check. So then in a situation like that, we have to obey to the instructions of the customer. Then we have to stop the payment of the check. Then the mandate means if proper mandate is not given to the bank. So for example, we say a check has been issued by a company. The company has authorized two signatories to issue checks, but in this occasion, this particular check has not signed by the authorized signatory, somebody else in the company, the account holder. So then, in a situation like that, bank does not have a mandate to honor the check. So in a situation like that, it is a legal barrier that to pay the check. So bank has to prevent from paying the check if there is a legal barrier. Then the next point that bank has to see before pay the check, we have to ensure the check is presented during the banking hours. Why we say it has to be presented during the banking hours? Now you see, when you step into a bank branch, you can see bank branch, they have or they have noticed to the public, to the account holders, the banking hours. Some banks, they say they have stated that their banking hours are 8 to 9 to 3. It could be differ from bank to bank, branch to branch. Now, same bank branches can have different time of working hours. So therefore, it is not unique to every bank, or it's not general to every bank. It can be changed from bank to bank and also from the branch to branch. However, it is very important to show, or very important to notice the customers, the bank's working hours. Why? The customers has to present the checks for the payment during the banking hours. So if it is presented during the banking hours, the bank has a legal duty to honor the check. Then the next one is if the check is presented to the same branch. So this is actually this point is these 2 points, last 2 points, is based on the classical banking. Now you know that with the technology change, the development of the technology, now we have unibank system where one branch of a bank can view all the accounts of the other of the customers of the other branches also. So therefore, it's technically now it has changed. However, the law, as per the law, the check has to be presented to the same branch where the account is maintained to honor the check as a duty. So then if these conditions are fulfilled, the bank has a duty to honor the check. That's a duty. So under the banker-customer relationship, it's a duty. If bank fails to meet this duty, or fails to adhere to the duty, perform the duty, then it's a breach of contract. So therefore, it is very important to understand the duty to honor the customer's checks. The bank wrongfully dishonor the customer's check, then what will happen? It could be a breach of contract. Then the customer can ask damages from the bank. The next duty of the bank is very important for your exam, and also uh, to perform your duty as a bank. The most important duty, that is duty of secrecy. Now, what is duty of secrecy? In simple language, the duty of secrecy means the banker cannot or should not divulge any information of the customer to a third party without the consent of the customer. So if I repeat in simple manner, the duty of secrecy is the banker should not divulge any information of the customer to a third party without the consent of the customer. So this is the basic idea of duty of secrecy. Then what is the limit of this duty of secrecy? What is covered under this duty? This is not limited only to the account details, but also to all other facts arisen out of the banker-customer relationship. This is very important to the bankers. My experience is when I ask the question, what is duty of secrecy? The most bankers, they say the banker should not divulge the account details of the customer to any third party without the consent of the customer. That is their idea, or that is their perception with regard to the duty of secrecy. But what is important here is that we have to remember, we should remember this duty of secrecy is not limited to the account details, right? So anything that bank knows about the customer, if that information is given to the bank or came to the knowledge of the banker as a result of banker-customer relationship. Now, for example, we have when a customer open an account, we take a lot of information of the customer before we open the account. We interview the customer, especially when we are opening a current account. We interview the customer, we ask his personal information, his address, and so on, and also his employment here or business information, financial information, everything that we ask. So we gather those information, and those information are with us and came to the knowledge of the banker as a result of banker-customer relationship. Otherwise, the customer or a person has no right or no obligation to inform those data or information, provide those information to a banker. So he provides this information because that he has a banker-customer relationship with the bank. So contractual relationship. So therefore, the customer, provide this information to the bank. The question is, under the banker-customer relationship, under the duty of secrecy, whether the banker can divulge information apart from the account details. Now, we definitely know that you can't divulge account details to a third party without the customer's consent. So that we know. However, the question, the unclear area is to the banker especially, whether they can divulge other information like social information or financial information or even health information of the customer can be revealed or can be divulged to a third party without the consent of the customer. So answer is very clear. The duty of secrecy is not limited to the current accounts or accounts details. It applies to all facts. So came to the knowledge of the banker as a relationship, as a result of banker customer relationship. So everything is covered then under this duty of secrecy. Then uh, the duty of secrecy, this has been recognized in the Banking Act, and the bankers are bound by the Banking Act. So we know that we have a Banking Act, Act number 30 of 1988. So that is applicable to the banking business and banks also. So that duty of secrecy, not like other duties of the banker, but it has been included into the Banking Act. So therefore, it is now we called it as statutory duty. Statutory duty. You are statutorily bound to follow the duty of secrecy. So section 77 of the Banking Act is important with regard to this duty of secrecy. Very important that you have to remember this section for your exam also. There are a lot of questions in the previous occasions also. They have clearly asked these sections when it comes to duty of secrecy. So therefore, remember for your exam is very important. Section 77 of the Banking Act, which says every banker, every employee of a banker has to sign a declaration of secrecy, that when you join to a bank as a banker, so you have to sign this declaration. So then the next important section is section 79 of the Banking Act. Section 79 of the Banking Act is with regard to the punishment and the liability of the banker if he breach duty of secrecy. So section 79 says if a banker divulge information of a customer without his consent, it's a breach of duty of secrecy, and it's a criminal offense. It's very important. A lot of bankers, they don't know the gravity or the liability of breach of duty of secrecy. It's not just a civil matter, it's a criminal offense. So therefore, the banker who commit this offense can be tried before a criminal tribunal, especially in the magistrate court. So it's a criminal liability. Then the fine is 1 million. So you can be subject to 1 million fine, and also imprisonment 3 years, regular imprisonment in 3 years. So very important. These are the punishments that is mentioned in the Banking Act for the breach of duty of secrecy, section 79. It's a criminal liability, and if you found guilty, then you are subject to 1 million damages that you have to pay to the customer, and also that you can be imprisoned, you can be sent to the prison for 3 years because it's a criminal liability. So when you see this, you may understand the gravity of breach of duty of secrecy. Section 79, section 77 and section 79 of the Banking Act is very important with regard to this duty of secrecy. So then we'll go to the next slide. When we discuss the duty of secrecy, this case, there's a case law that you have to remember, very important case. We can't talk about bankers' duty of secrecy without discussing this case. The case is Tonya versus National Provincial Bank. Tonya versus National Provincial Bank. Commonly, this case is referred as the Tonya case. At least that if you can remember as a Tonya case, that is sufficient. What happened in this matter? Tonya, he was a customer, a current account holder of National Provincial Bank. So he had a current account. His account was overdrawn. So that means that he has issued checks without sufficient funds in the account. However, the bank has paid the checks by overdrawing the account. And the payments were delayed and defaulted by the customer, Tonya. Mr. Tonya, he was employed as a salesman in a company. He was a salesman of a company. So that company also maintained a current account with the same bank, same branch. It's a coincidence. So the company also had a current account in the same bank, same branch. So what happened? One day, the bank received a check issued by the company in favor of Tonya. So Tonya is the payee. Drover is the company where Mr. Tonya worked. So now when the check is presented, but the check is presented by a third party, not by Mr. Tonya. So the check was endorsed by Mr. Tonya to another person. That person is is a gambling service provider. So he had a gambling place, and his account also maintained at the same bank. So what happened? The company now has issued the check to Mr. Tonya. Tonya has endorsed the check to a third party. That third party now presented the check for the payment. Now, since the check is endorsed, now the true owner or the new owner, true owner of the check is this third party. So now think, if the check is not endorsed by Mr. Tonya, since Mr. Tonya is the payee of the check, he has to deposit the check to his account to encash it. Had it been presented for the payment by Mr. Tonya, what could happen? The bank can set off the money of the check. Once the check is realized, the funds will come to Mr. Tonya's account. So the bank can exercise set-off rights and can set off the overdraft balance of Mr. Tonya's account. However, now what has happened? Mr. Tonya has endorsed the check to a third party. So now the true owner is a third party. When the check is presented and when the check is honored, the money will go to third party account. So the holder's account. So now when money goes to a third party account, the bank cannot set off that money against Mr. Tonya's account. So what happened? So the check got realized and the funds went to the third party account. So therefore the bank couldn't recover the money, recover the overdraft. So the manager got very angry, very upset about what has happened. So what he did, he contacted the director of the company where Mr. Tonya worked, and the manager informed the company, the director of the company, that the Tonya's account was overdrawn and he has defaulted the payment, and further that he was involved in gambling. So bank manager said that he was involved in gambling, that he has overdrawn his account, he is not paying. All this information that the manager informed a director of the company where Mr. Tonya worked. So then what happened? Tonya was under contract basis. He worked as a contract, under the contract basis in this company. At the end of the contract period, the company didn't extend the contract. In fact, they terminated the contract on the basis that he's involved in gambling and is not a person with a good character. So therefore, they terminated the service of Mr. Tonya. Then what happened? He lost his job. Mr. Tonya lost his job. Then he came to know that he lost his job because the manager has informed everything to his company. So therefore, Mr. Uh, uh, Tonya filed action against the bank. So on the basis that the bank has breached the duty of secrecy, bank has breached the duty of secrecy. So then what happened in the district court, against the district court judgment, they went to the appeal court, and the appeal court, the court held the bank has a duty of secrecy. The court held that the bank has a duty of secrecy. In this occasion, the bank has violated or breached the duty of secrecy. So therefore, the customer is entitled for the damages. So therefore, it's a very important case when it comes to duty of secrecy. Tonya versus Westminster's Bank. So you have to remember this. So Tonya versus National Provincial Bank. So this you have to remember. This case is very important. The judgment, the facts discussed in the case is very important. When you get if you get a question at the exam from this area, duty of secrecy, that remember that you have to elaborate your answer giving reference to the judgment of Tonya. So that is also very important, and also that you have to give reference to section 77 and section 79 and other relevant sections of the Banking Act. Right. So then we'll go to the next slide. We discussed that the duty of secrecy, under the duty of secrecy, bank cannot divulge any information to a third party without the consent of the customer. So when we say that, is it an absolute duty? That means under any circumstances, the bank cannot divulge information, any information of the customer. Is that the position? Now, when you analyze the law related to duty of secrecy, that you will realize that it is not that absolute right or duty. A bank can, under certain circumstances, under certain conditions, the bank can divulge information of the customer to a third party. So we'll see what are the situations, what are the circumstances that the bank can divulge information of the customer to a third party. So when we are going to discuss this, that we have to see under common banking law. So what are the situations, what are the circumstances that a banker can divulge information to a third party? That's number one. Number two, under the Banking Act, number 30 of 1988, what are the circumstances or what are the situations that a bank can divulge information of their customer? So two things, one under the common banking law, the other under the Banking Act. What are the provisions? So what are the situations that bank can divulge information of a customer? Right. So then, number one, when the customer gives a consent, Now that is obvious that when a customer gives consent to divulge his information, or customer gives consent to the bank to divulge information, so that with the customer's consent, so therefore he can't blame the bank for breach of or claim any damages on breach of duty of secrecy, because his consent is given. That's number one under common banking law. And number two, when disclosure is compelled by law, if it is disclosure is compelled by law, What does it mean? So it means the bank has a duty to disclose the information of the customer to a third party without his consent. For example, a common example is when a bank receives a court order to provide information. So then bank has to abide by the court order. Number one. Number two, if there is a request under customs ordinance, under section 9 of the customs ordinance, so then in a situation like that also, that bank has to divulge that information even without the consent of the customer. So if a request came under the Bribery Commission Act, again the bank has to provide information. Request under provisions of terrorism, Prevention of Terrorism Act. So there are also that the bank is liable, or bank is obliged to provide information of the customer without the customer's consent to the relevant authority. So therefore, it's very important. The disclosure can be done even without the consent of the customer under this situation, when the disclosure is compelled by law. Then the third one, when the bank owes a duty to disclose to the public. It's very important. Under the common law, this is another point that bank can divulge information of the customer. When a banker owes a duty of disclosure to the public. So under what situation or what conditions the bank has a duty to inform the public or provide information of their customer to the public? We'll take an example. We say we take the example we take the real example. We take Sakvitis, right? Now people we know that the public has invested money with Sakviti Ranasinghe. Now we came to know that he has misused the funds of the public, and there was a big unrest in the society with regard to these deposits of this company or with this person. So at least there was unrest among the depositors. Now we say, in your bank, without the knowledge of the public or the depositors, Mr. Ranasinghe, Sakviti Ranasinghe maintains an account. And you know that there are sufficient funds or a big amount of funds available in this account. So in a situation like that, this is this example only, the bank owes a duty to disclose that fact to the depositors. Because we know that depositors are now trying to get their money back, and they have gone to courts, and they are tracing the assets of this person, and you have an account with you which is not known to the public or not known to any law enforcement authority. In a situation like that, then you have a duty towards the public, right? At least towards the depositors. So therefore, in a situation like that, bank can divulge that information to the public or to the law enforcement authority without any court order or any other request. So that is number 3, when a bank owes a duty to disclose to the public. And the last one, under the common banking law, the bank can divulge information of their customer when the disclosure is required in the interest of the bank. Now the previous one, you disclose to the public. because you have a duty towards the public. This last one, you disclose or divulge the information to a relevant authority because it's for the benefit or for the interest of the bank. In other words, if you don't provide this information, then you will be in trouble. You will be in trouble. The bank will be in trouble. Bank will be in breach of law. So therefore, in a situation like that, the bank can divulge information of the customer without his knowledge or consent. For example, we take an example. We say there is a known terrorist, right? And he's maintaining an account with you. A terrorist or underworld leader is maintaining an account with you. Now the law enforcement authorities has captured this person, and now they are investigating the assets of this person. So you know that fact. So in a situation like that, the bank has a duty to disclose these the facts to the relevant authority, law enforcement authority, not to everyone, to the relevant authority in the interest of the bank. Or otherwise what will happen? The bank will be in trouble because that you are keeping illegal money, or black money, or money that is not legally earned by a person. So therefore, that you can be liable for that. So therefore, the bank can divulge that information to the relevant authority without the consent of the customer. So those are the 4 instances that bank can divulge information of the customer to a third party under common banking law. Under common banking law. Right. Next, we are going to discuss the provisions or the situations where a banker can divulge information to a third party under Banking Act. So Section 77 of the Banking Act says that a director, a manager, officer, employee of a bank should observe the strict secrecy in respect of all transactions of the bank and the customer. And also Section 77 says every employee of the bank has to sign a declaration of secrecy. So then once you sign that declaration, you are bound by that statement or declaration, and you cannot divulge information to any third party. Then otherwise it will be a offense, criminal offense. But the Section 77 of the Banking Act say under certain situations, under certain conditions, under certain circumstances, the bank can divulge information to a third party without the consent of the customer, but it is not then breach of duty of secrecy. What are those conditions? We'll see. Number 1, when required to do so by court of law by the person to whom such matter is related. So that means when the request comes from courts as a court order, the bank officers, they have to adhere to the court order, has to provide that information to the relevant the law enforcement authority. Number 2, by the person to whom such matter relates. That means the information relates to the customer. So therefore, that we can divulge information to the customer or at his request to any person. So therefore, if it is related to the customer, if customer requests to the bank to provide that information, so we can provide that information. So that is then not a breach of duty of secrecy. That is number one. Number two, in the performance of his duty, in performance of his duties, the bank officer, banker can divulge information. This is new. This is not in the list of common banking law, not under the common banking law. You know, under the common banking law, it is you can't divulge information as a part of your duty. But when it comes to Banking Act, Section 77 says the banker, while he's performing his duties, if he divulges information to a third party, that is not illegal, that is legal. So then that is number one. Then number three, in order to comply with any of the provisions of the Banking Act or any other law. So that number three says, if you are compelled to divulge information under the law, it could be Banking Act or any other act passed by Parliament or any other legislation. So if you are duty bound, if you are statutory bound to provide that information, then you can divulge that information. As for example, when the central bank has the authority to supervise the banks, that is by the government, the legislature has given the authority by passing an act. So then when central bank supervising the banks, that central bank can time to time request information from the banks. Now, when a central bank requests information from a bank, the bank, commercial bank or whatever the bank, provide that information to the central bank. So under this Section 77, it says, in order to comply with any of the provisions of the Banking Act or any other law, the bank can divulge information of a customer without his consent. So these are very important. That's under the Banking Act. These are the three occasions that a banker can divulge information to a third party without breaching banker-customer relationship or without breaking the duty of secrecy. So that is the situation under the banker-customer relationship about duty of secrecy. Then we'll see the next duty of the banker is a duty of care. Banker has a duty of care towards their customer. So this duty of care owed by the bank to customer, number one, at the time when the paying bank has the duty of care to protect the customer from the frauds or agents such as directors, partners in issuing checks and other payment orders. Now, what does it mean? The paying bank has a duty to protect the customer. Customer means the account holder from any fraud of agents of the customer or directors or partners of a customer. Now we say account holder is a company. Account holder is a company. Current account holder is a company. So then the company is the customer. The bank has a duty to prevent any fraud, or bank has a duty of care to protect the customer, that is the account holder, the company, from frauds of their agents. Now, directors or partners of the company can misuse the funds of the company. So therefore, bank has a duty of care to protect the rights of the customer, that is the company. Then the bank owes a duty of care in giving financial and investment advices. That is another service that we provide to our customers. We give them sometimes we give advices, financial advices, investment advices banks provide. So what is your duty as a banker when you're providing these advices? So the bank owes a duty of care when you are giving financial and investment advices. That means that you should be very thorough with the subject, and you should be in a position, you should have the knowledge, skill to provide a correct financial advice to the customer. If a banker provides a wrong advice or careless advice or negligent advice, if any damage happens to the customer, the bank is liable as under the banker-customer relationship because they have breached the duty of care. So for the damage, then the bank has to, bank is liable, then the bank has to pay the damages to the customer. That is number two. Number three, the banks owes a duty of care in explaining effects of the security documents. This is another important point, and this is another very, very common defense customers or guarantors especially takes at courts when we file action against the borrowers and the guarantors. Banks owe a duty of care in explaining the effects of the security documents. In other words, in simple words, if I say, the bank officers, they have a duty to explain the security documents when you are obtaining from the customer or from the guarantors. Now, for example, we say now you grant a facility to a customer and you ask third-party personal guarantees to protect or as a collateral to secure the facility given to A. We say the guarantors are B and C. When B and C, when they are signing or before they sign the guarantee bond, that the banker has to inform them that they are signing a guarantee bond and the repercussions and their liability if they sign as a guarantor. So that is meant by this point. The banks owe a duty of care in explaining the effects of the security document. So you have to explain the effects of the security document. If you sign this security document, what will happen? So if borrower default, then the bank will file action against the guarantor. That you have to tell at the time of signing or before the guarantor sign the agreement or the contract. So with this we'll go to the next one. The banker's duty as a trustee. What does it mean? Under the banker-customer relationship, the banker has a duty as a trustee. What does it mean by? The banker is a trustee with regard to the safe custody or deposits of goods. Now, we know customers, they deposit certain things with the bank. Mainly, they deposit money. Apart from that, they deposit, if they, for example, if we have provided security wallets or security safety lockers. If we have provided secure safety lockers to the customers bring their valuables and they place them in the security or other safety lockers. Once the goods are deposited in the safety lockers, the bank has a duty. The bank is the trustee of the goods. So you are holding the goods as a trustee on behalf of the customer. So if anything misplaced during the goods are in your possession, the bank is liable to pay the damages to the customer. So bank has to hold the depositors and goods of the customer on behalf of him. So you are the trustee, the bank, and you are keeping the goods on behalf of the customer. He is the principal. The bank has to act according to the instructions or mandate of the customer. So when he deposits money or when he deposits goods, that he give instructions to the bank. He give instructions. So bank has to abide by the instructions given by the customer. So therefore, it's very important. For example, a customer can deposit money to his current account and instruct the bank not to deduct the OD balance, because he says, now I have issued a check. Once the check comes to the account, you have to pay it. Because of that, don't set off the money that I have deposited to my account, the money I deposited to this account, to meet the check. So that is his instructions to the bank or the mandate given by the customer. However, if bank fails to observe these instructions, then the customer can sue the bank. Customer can sue the bank. So bank can be held for theft or misappropriation of the employees during the banking business. So if customer deposited money or if customer deposited goods in the safety lockers or in the account, in a situation like that, if bank officers misappropriate the funds of the customer or misuse the goods kept in a safe custody of the bank, then the bank is liable for such action or act, and bank is liable to pay damages to the customer. So then we'll go to the next one, bank's duty as an agent. When we say the banker has a duty as an agent, the bank is the agent of the customer. Once the customer opens an account with the bank, banker-customer relationship starts. Banker-customer relationship starts. And the banker-customer relationship starts, under the banker-customer relationship, there are different types of the relationship. The principal and agent is one of the type of the banker-customer relationship. So under the principal and the agent relationship, the principal is the account holder, the customer. Agent is the bank. It's not other way, right? Always remember, under the banker-customer relationship, the principal is the customer, bank is only an agent of the account holder or the customer. So if you are the agent of the customer, remember the bank has to act or bank has to safeguard the interest of the customer, the principal. That is very important. So banker is an agent of the customer for remittance, collections of checks and other payments on behalf of the customer. So if a customer open an account with a bank, banker-customer relationship starts, then principal and agent relationship creates. In principal and agent relationship, the principal or the rather agent has a duty towards this principal. So the banker is an agent of the customer, Customer is the principal for the remittance, collections of checks and payments on behalf of the customer. Number two, the bank has as the agent of the customer has a duty to act for the benefit of the principal, the customer. What does it mean? If you are the agent of the principal, you always have to work or have to act for the benefit of the principal. So that is expected when you are appointed as an agent. So you have to protect the right of the principal account holder. So therefore, remember, it is a duty of the bank as an agent to act for the benefit of the principal, not for the benefit of the bank, but for the benefit of the principal, that is the customer. So those are the things that you have to remember, the duties that you have to remember under the banker-customer relationship, the banker's duties. Then, so we now, up to now, we have discussed who is a banker, what is banking business, who is a customer. Then we discuss under the banker-customer relationship, what are the duties and rights of the banker. Now we are going to start a new point, that is the customer's rights and duties under the banker-customer relationship. Previously we discussed the bank's rights and duties. Now we are going to discuss what are the rights and duties of the customer under the banker-customer relationship, contractual relationship. So we'll see what are the rights or what are the rights of the customer under the banker-customer relationship. Number one, first right of the customer. The customer has a right to open an account. So what does it mean? This means if customer gives a mandate to the bank at the time of opening the account, the bank has to act according to the given mandate. If I explain this in simple manner, if a bank allow a customer to open an account, that means the banker-customer relationship starts. When a banker-customer relationship starts, bank has rights and duties, and also customer gets rights and duties. When an account is opened by the customer gives a mandate to the bank. Customer gives an authority to the bank to operate his account. He maintains the account, but banks operate the account. So the customer has always gives an authority or mandate to the bank to operate his account. However, that authority is given under a condition. What is the condition? The bank has to act according to the given mandate or instructions. So very important, if customer gives a specific instructions, that bank has to abide by the instruction of the customer. So I will explain that, you will realize what it is when we discuss this case. Hunabain versus Federal Bank of Australia. Hunabain versus the Federal Bank of Australia. So what happened in this matter? Customer had a current account. His account was overdrawn, and he deposited some money. The customer deposited some money with a specific instructions to the teller. So when he came to deposit money, and he gave specific instructions to the teller with the money, with the deposit slip, he gave specific instruction. What was the instruction? He said the money was deposited to meet a check which could be presented to his account. So he said, I am depositing this money. I know my account is overdrawn, but I am depositing this money because I there is a check that I have issued, which is coming soon, will present soon for the payment. So therefore, here is the money. Keep this money in this account without setting off, without deducting the overdraft. This money I deposit to meet the check. So once the check comes, that you have to honor the check by utilizing this money. That's what he said. So that is specific instructions given to the bank. So what happened? The money was deposited to check to be presented. The manager, without informing the customer, set off the OD against the deposit. Even though the bank, the customer has given specific instruction to the bank, the manager, what he did, he set off the OD. So then what happened? Automatically the check came and check got returned because sufficient funds were not available. So then thereafter, this customer, current account holder, filed action against the bank. And it was held in this matter, the bank has no right to set off, and the bank has to abide by the instructions of the customer. So court held that when the specific instruction is given, the bank has no right to set off by exercising the bank the right to set off, but the bank has to abide by the instructions given by the customer. So that was the decision of the courts. Then the second right of the customer has a right to stop the account. When a customer open an account, when he maintain an account, customer can give instructions to the bank to stop the account. So when we say give the instructions given to stop the account, what does it mean? Customer can cease the debits and credits to the accounts until further notice. One thing, when we say that the customer has a right to stop the account, it's not a permanent thing, it's a temporary thing. Stopping an account is a temporary thing. The customer can give instructions to the bank to stop debit and credit of his account until further notice. So then the bank should immediately stop the account once the mandate is revoked, so that you have given authority to do transaction on behalf of the customer. So transaction means debits and credits. So you go to his account, you do debits and credits. But now when a customer gives an instructions to stop the account, it means that you have to stop debits and credits of the account. Debits and credit of the account. So then, in a situation like that, the bank cannot operate the account, do any debits or credits. The bank should not honor any checks or pay any standing orders during this period. During the account is stopped, during this period, the bank cannot pay any checks or pay any standing orders. The bank can debit the account only to recover the losses and charges occurred before it received the stop notice. So that means the only thing that bank can do, bank can recover the expenses or interest accrued before you received stop instruction from the customer. Now, for example, we say now you received instruction from the customer to stop the account. But by that time, the account was overdrawn. So obviously, you know that when the account is overdrawn, the bank charge interest. So interest accumulate. So under this, you are entitled to charge interest during this period, stop period. But other than that, no transaction can be done. So the banker-customer relationship prevails. The other important thing is, even though this account is stopped, account is not closed. Stopping an account and closing of account are two different things. The customer give instructions to stop his debit and credit for a certain period of time or until further notice is called stopping of an account. Right? So therefore, it's a temporary thing. If the banker-customer relationship still prevails, it is there. So therefore, the duty of secrecy and other duties of the banker and also the rights of the bank can be exercised during this period. But only thing that you can do, only thing that bank should not do, no debits and no credits. So then the next one, customer's rights. Number 3, he has a right to close his account. Customer has a right to close his account. Customer can close his account at any time. Right? At any given time, the customer can close his account. Customer-banker relationship comes to an end. Once the account is closed, the banker-customer relationship comes to end. As you are aware, the banker-customer relationship starts at the time the customer opens the account, any type of account. But it comes to end, the banker-customer relationship comes to end at the point where the account is closed. So thereafter, no banker-customer relationship. Then the question is, what about the duty of secrecy? Can we divulge information of our ex-customer who has now closed his account? The answer is no. Even though the banker-customer relationship is terminated by closing the account, the duty of secrecy is still there. So therefore, you can't divulge information. If you divulge information, customer can ask damages from the bank. So therefore, it is very important. Then closed account cannot be reopened. This is very important. Closing of account is not it's not a temporary thing. It's a permanent thing. So it's when you close the account, it's permanently closed. So therefore, you can't reopen the same account. If customer wants to reopen the account, you have to say no. You can't reopen the closed account, but he can open another account. But you can't allocate the same number to the new account. So therefore, it is very important. It's a permanent thing. It's a permanent closure of the account, and it cannot be reopened. So very important, if you get instructions to close the account, you have to get that instruction in writing. Customer can give you instruction, even verbal instruction, but it is for the safety of the bank. It is your duty as a banker to obtain that instructions in writing. Then we'll go to the next one. Then the fourth right of the customer has a right to get interest, right to interest. So we know for the deposits account, like savings account, fixed account, fixed deposits, NRFC, RFC accounts, customer get instructions. Customer receives interest. Rate of interest fluctuate in line with the prevailing market rate. If it is a fixed deposit, then of course that the rate is predetermined. So you say, right, we give you deposit say 1 million for over a period of 1 year. So bank promised to give, we say 10% interest. So that is fixed. The rate is fixed. It's predetermined. So at the end of the tenor, at the maturity of the fixed deposit, bank has to pay 10% interest on the capital deposit. Savings account, the rate is not fixed. Interest rate is not fixed. Bank is bound to pay interest, but the rate is not fixed. So that can be fluctuate in line with the prevailing market conditions of prevailing market rates. So that is a very important point. And special types of account, the bank has no right to change the agreed interest rate during the tenure. So what is special type of account? That is example, fixed deposit. It's account, fixed deposit account. So once the rate is fixed, the bank cannot change the rate before its maturity without the consent of the customer. Now, for example, if you get a deposit from a customer for a period of 5 years to pay 20% interest per annum, at the end of the second year, you can't say that now the interest has dropped, so therefore we are dropping the interest. So you can't change. You can't change. The only occasion that you can change is in a fixed deposit interest rate that you can change at the renewal. As we know that most of the now the practice is most of the fixed deposit, they get auto renewed if customer has instructed the bank. So in a situation like that, at the end of the tenure, you terminate the previous fixed deposit and you create a new account, new fixed deposit. So at that point, you can decide the interest rate prevailing on the market condition. That is the point that you can change the interest rate of a fixed deposit. However, during the tenure, before the maturity, the bank cannot change the interest rate. With regard to interest, the right to charge interest or right to claim interest, this case is very important. Foley versus Hill. In this case, it was decided when the money is deposited to account by the customer, the money is no more customer's money. It's considered as the bank's money. So therefore, the bank can invest or bank can lend or bank can do whatever transaction with the money deposited with the bank. The only condition is that the bank has to pay that money back to the customer when he demands. And with the interest that you agree. So that those are the conditions that you have to remember. Then the fifth right of the customer, right to draw checks. The customer, the current account holders, they have a right to issue checks. So there's no current account without a check. So you can't say that we will allow you to open a current account, but we can't allow you to issue checks, because it's both going hand in hand. So current accounts are operated through checks. So that is very important. So when a customer open a current account, he gets a right. He has a right to issue checks. So then the current account holders have an implied right to issue checks. The bank has an implied duty to honor the checks up to the limit of credit balance. So once a current account holder issue a check, when it comes to for the payment, the bank has to pay the check. Bank has a duty to pay the check if sufficient funds available in the account. And the customer can deposit checks to his current account also. So customer can deposit the checks he received from third parties to his current account. That is also another important point, that important right that customer enjoy under the banker-customer relationship. So there is a case relevant to this point, that is Joachimson versus Swiss Bank Corporation, decided in 1922. Decided in 1922. In this case, very important 2 points were decided by the court. Number one, customer has to make a demand to repay the money. So one point that court decided, when a customer deposit money, to get money back or to withdraw the money, he has to make a demand. It could be, if it is a savings account, he can give the, or he can claim the demand, or he can make the demand uh, by issuing a deposit slip, rather withdrawal slip. If it is a current account, he can make the demand by issuing a check. However, customer has to make a demand to repay the money. Otherwise, bank is not liable to pay. Number two, that demand has to be made to the same branch and to the during the working hours. If customer wants to withdraw the money, he has to make the demand or claim to the same branch where he maintains the account. And also, he has to make that demand during the working hours. This is, again, I'm telling you, this is, you can see, this has been decided in 1922. By that time, we didn't have this computer system. The bank branches were not interconnected by a system. So therefore, this judgment is relevant to that era. However, the principle of law decided in this case still valid. So therefore, even though now the technology has changed, the decided case judgment is there. It has to, the demand has to be made to the same branch, and it has to be made during the working hours. And the next one, the duties of the customer to the bank. So under the banker-customer relationship, what are the duties of the customer towards the bank? We'll see what are the duties. Number one, duty of reasonable care. Duty of reasonable care. That is very important. Number one, reasonable care. What is this? The customer has an implied duty to exercise reasonable care when he gives written orders or instructions. Number one, if I repeat again, number one, duty of reasonable care means the customer has an implied duty to exercise reasonable care. Customer has a duty to exercise reasonable care when he issue or when he gives written orders or instructions. Example, check. It's a written instruction. So he has a duty so that, number one, not to mislead the bank. So the customer should not give instructions which could mislead the bank. Number two, the customer should not give instruction which facilitate a forgery. Number two. So therefore, it is very important to remember this duty of reasonable care. This is discussed in this matter, London Joint Stock Bank versus Macmillan and Arthur. This case is famous as a Macmillan case. Sometimes we refer this duty of reasonable care as a Macmillan theory. If you get a question in your exam, explain Macmillan theory, that means that you have to explain the duty of reasonable care when a customer when he issuing checks. What happened in this matter? Mr. Macmillan, he issued a check. And he wrote the check in a manner where he wrote the check like this. We say this is the check, right? Now you know that in a check that you have to write the value of the check in words, and also there is a space that you have to write the value in figures. So he wrote a check, and he wrote it's a pound check. So he wrote the check like this. So you can see he kept a space here, and also he kept a space after the two. And he didn't write the value of the check in words. And this was a cash check. and this was signed and given to a person. So what happened? So the person, the holder of the check, he got the check and he altered the check. He put 1 here and a 0 afterwards. Now initially the check was for £2. Now after the alteration, it is now £120. What happened? This was presented for the bank for the payment, and bank paid £120. £120. Now, when the customer, the account holder, realized that the bank has paid 120, he knows that he issued the check only for £2. So what happened? He then sued the bank. Mr. Macmillan sued the bank. So his argument was that I gave instructions to pay only £2. The bank has breached the instructions, has ignored my instruction, and has paid £120 instead of £2. So therefore, the bank is liable to return my money back. So in this matter, it was decided by courts. The customer has a duty of reasonable care when he is issuing checks, a reasonable care to give instructions which is not misleading the bank, and also he has a duty of care when he is giving instructions not to give instruction which facilitate forgery. Now when you see this check, you can see check is an instruction given by the customer. So you can see the manner that he has wrote the check, right? He has wrote the check that he has not written the value in words, and he has kept a space. So therefore, a person easily altered the check. So he has facilitated for a forgery, the customer, the account holder. So therefore, it was decided the customer has breached the duty of reasonable care. So therefore, the customer is not entitled for the money. Then the next duty of the customer, duty number 2. That is duty to disclose forgeries. Duty to disclose forgeries. So then, what is this? Duty to disclose forgeries. The customer has an implied duty to inform the bank if he discover any forgery about his checks or account. Customer has a duty to inform the bank if he discover any forgery about his checks or accounts. There is a case relevant to this, that is Greenwood versus Martins Bank. This the duty of disclose forgeries is known as the Greenwood principle. What happened in this matter? Mr. Greenwood maintained an current account with Martins Bank, and he had a checkbook. He kept the checkbook at his home, and one day when he reconcile his account, when he go through his account statement, he observed that some checks have been paid from his account which were not issued by him. So then he checked his checkbook, and then he noted that some check leaves have been taken from the checkbook and has issued checks, and those checks got realized. Those were cash checks, and those checks money have been taken by somebody. So then he inquired from his wife, and then wife admitted that she took checkbook and check leaves and forged the signature of Mr. Greenwood and got money from the bank. Now you see, now in this situation, there had been a forgery. Forgery came to the knowledge of the customer. So what happened? Mr. Greenwood didn't inform the bank. He advised the wife not to do it again, but he didn't inform the bank. There's a forgery, but he didn't inform the bank. Now, it's a clear breach of duty to disclose a forgery. Duty number 2 of the customer. So then after that, what happened? Again, Mr. Greenwood realized after a certain period of time, he checked his account statement again, and then he noticed some checks again has been issued from his account and been paid. And this time he again asked from his wife, and wife admitted that she took the money by forging the signature of her husband, Mr. Greenwood. This time, Mr. Greenwood filed action against the bank. So his argument was his signature was forged, and therefore the checks are not valid in law. So therefore, the bank has paid money to the wrong checks or forged checks. So therefore, the bank has no right to debit his account. So he argued the bank has to return the money to his account. So that argument was overruled by the court of law, and it was decided Mr. Greenwood has breached the duty as a customer. He has a duty to disclose forgeries. There was a forgery that came to the knowledge of Mr. Greenwood, but he didn't inform the bank. So therefore, Mr. Greenwood is not entitled for the money paid by the bank. So that is called Greenwood theory or Greenwood principle. Then customer's duty to check and reconcile his account. Now, when we say, as we know that we send account statements to the customers, the question is, we send account statement monthly or weekly. However, the question is whether the customer is obliged to go through his account statements and inform the bank if there are any defects. If there are any defects, whether the customer is obliged to inform the bank. Is it a duty of the customer? With regard to this point, there is a decided case, Tai Hing Cotton Mills Limited versus Liu Chong Ming Bank. It was decided it is not the duty of the customer to reconcile his account or check his account and inform the bank. It is the duty of the bank to maintain the account properly on behalf of the customer. As we know, customer is the principal, bank is the agent. Customer gives authority to the bank to operate his account. So therefore, it is the duty of the bank to operate the account in correct manner, correctly, without any fault. It is not the customer to reconcile this account and inform the bank. So that was decided in that case. That there are other relevant cases, Sri Lankan cases also. One is Capital Rubber Estate versus National Bank of India. The other case is Collatus versus BOC, Bank of Ceylon. There are other cases also decided, but I have mentioned here only two cases in Sri Lankan cases. In these cases also it was decided checking checking of account statement is not the duty of the customer. Maintaining the account properly is a duty of the bank. So then we'll go to classification of banker-customer relationship. Under that, when we say banker-customer relationship is a contractual relationship. So we can categorize this relationship into two categories. One is general relationship, the other one is special relationship. What is general relationship of banker-customer relationship? It's a debtor-creditor relationship. Debtor-creditor relationship. When a customer open an account with the bank, when he fills and sign the account opening form, by signing the form, enters into an agreement or contract with the bank. So when he opened an account, you know that he signed an agreement with the or account opening forms. So then we create a legally enforceable valid contract. Then when the customer deposit money into his account, what happened? The bank becomes the debtor and customer becomes the creditor. Once a customer deposit money, bank is obliged to pay that money on demand. So therefore, bank owe money to the customer. Customer is the creditor and bank becomes the debtor. So therefore, it's a debtor-creditor relationship. Then the customer who borrows money from the bank owes the money to the bank. In the case of any loans or advances, the bank becomes the creditor, the customer becomes a debtor. Now, for example, we say customer obtain a loan from the bank. Customer has to pay the loan. So customer owe money to the bank. So then again, the relationship between the banker and the customer is a debtor-creditor relationship. In this occasion, the customer is the debtor, bank is the creditor. Bank is the creditor. So, number one, the general relationship between the banker and the customer, it's debtor-creditor relationship or creditor-debtor relationship. A special type of relationship, now we discuss what are the special type of relationship between the banker and the customer. Bank as a trustee, as we discussed before. Also, the trustee is the holder of a property on behalf of the beneficiary. The customer keeps certain valuables or securities with the bank for safekeeping or deposits. Certain money for his specific purpose. The banker in such case acts as a trustee. Bank charge fees for the safekeeping valuables. Now, we say that we have granted or given a facility to the customer, safety locker facility. So the customer brings his valuables, jewelries and other things and keep those goods in the safe custody of the bank. So what is the relationship between the banker and the customer in a situation like this? It is not money deposit or it is not lending. So what is this relationship? The relationship is trustee and the beneficiary. Bank is the trustee keeping the goods in the safe custody on behalf of the beneficiary, the customer. So that is one type of special relationship. Then the bailee and bailer, the other type of relationship. The bailment is the delivery of good by one person to another for some purpose upon a contract. When the purpose is accomplished, the property to be returned. The person delivering the goods is called the bailer, and the person to whom the goods are delivered is called the bailee. Now, for example, banks obtain tangible securities, in some cases physical possession of the security goods, valuables, bonds, etc. are taken. While taking the physical possession of the securities, the bank become the bailee and the customer become the bailer. For example, if customer brings a property, for example, we say jewelry, and keep that jewelry in the custody of the bank and take an advance against it. So the property is given not for the safe custody, for a purpose as a security. Once the purpose is accomplished, that means once the loan is repaid, the bank has to return the property to the customer. So what is that relationship? On what basis that the customer and the banker keep this property? So it is not safe custody. It is this type of relationship is called bailee and the bailer. Bailer relationship. Then we have lessor and lessee relationship. a lease is a property. Lease of property is a transfer of the right to enjoy such property for a period of time in consideration of price paid or promise. So we say now we are in different types of businesses today. The banks, they provide leasing facilities. Banks provide leasing facilities. When you provide a leasing facility, you give a property to the customer to enjoy. So he can ride if it is a vehicle, he can use the vehicle. He can enjoy the vehicle for a certain period of time. So for that period, for the use of the vehicle for that period, customer has to pay a rental to the bank. So it's a lease agreement. So under the lease agreement, the relationship between the bank and the customer is a lessor and lessee relationship. Then agent, fourth one, agent and principal relationship. As I informed you before, also agent, the bank is the agent of the customer. An agent is a person who acts for and on behalf of the principal under the express or implied authority, and the acts done within such authority are binding on the principal. So example, books, banks collect checks, bills, make payments to various authorities, telephone bills, insurance payments, etc. On behalf of the customer. So we pay on behalf of the customer, we pay bills, we collect checks as an agent of the customer. So in a situation like that, the relationship between the banker and the customer, we can categorize as an agent and principal relationship. All such cases, bank can act as agent and the customer its customer, and the charges for these services, the bank charges. Then as a custodian, the custodian is a person who acts as a caretaker of something. The bank takes legal responsibility of the customer's securities. When opening an account, bank becomes a custodian. So when a customer open an account, he deposits money, the bank is the custodian of that money. So bank has to keep that money in the safe custody for the beneficiary, that is a customer. So bank is a custodian. Bank has a relationship with the customer as a custodian, and as a guarantor, bank gives guarantees on behalf of the customers. Guarantee, when we issue bank guarantees, we give a guarantee on behalf of the customer. So then in a situation like that, the relationship is as a guarantor when we issue a guarantee. So guarantee is a contingent contract. So therefore, when a guarantee is given on behalf of the customer, bank is obliged to pay the beneficiary when the bank guarantee is claimed. Bank guarantee is claimed. So on behalf of the customer, bank provide a guarantee as a guarantor to a third party. So the relationship of the bank is as a guarantor. So then the last part of the lesson, termination of banker-customer relationship. How to terminate the banker-customer relationship. Termination of banker-customer relationship. The relationship between the banker and the customers can be terminated or can be ceased by the death or insolvency or lunacy, or that is mental illness of the customer. That number one. Number two, the customer closing the account by the customer. The third one, liquidation of a company. If the customer is a company, if company is liquidate, then the company is no more exist. So it's a death of a company. So then banker-customer relationship comes to end. The closing of the account by the bank after giving due notice. So if bank close the account, then again the banker-customer relationship comes to end. Then the completion of the contract or the specific transaction, the last one, number 5, that is that once the completion of the contract, for example, we say a customer open a fixed deposit with a bank for a period of 1 year. So the banker customer relationship prevails only 1 year. Once the fixed deposit is matured, banker customer relationship comes to it because the contract is completed. So thereafter, no banker customer relationship. So those are the methods that a banker customer relationship can comes to end. 5 ways that a banker customer relationship comes to end. The banker customer relationship is a contractual relationship. It can be terminate in accordance with the terms agreed upon the parties. If it is a fixed deposit or safety deposit, terminates at the maturity. The bank nor the customer can terminate the agreement before the agreed date without the consent of the other party. If it is a fixed deposit, it is valid for a period of time, and no party, that is neither party, bank or the customer, cannot terminate the fixed deposit without the consent of the other party. If it is a current account or savings account, customer is entitled to terminate the relationship at any time by drawing out of the funds and closing the account. So if it is a savings account or current accounts, it's different. Then the customer at any time without prior notice can withdraw all the money and close the account. So then the banker customer relationship comes to end. If it is a savings account, if bank wants to terminate, bank has to give notice, reasonable notice, and thereafter can close the account. So customers right to terminate. There is a case that I have given here, that is Bank of Borado versus ASSA Mohammed. The customer demanded for the closure of his account, but the bank ignored the demand and continue the account. So customer gave instructions to the bank to close the account, but bank didn't accept the instruction and continue with the account. So what happened? It was held. The cause of action arise from the demand. So the court decided that when the customer sued the bank, and the court held that the customer has a right to sue the bank when at the point the action is arisen from the date of the demand. So then the customer can ask damages also. So that is banker customer relationship termination. Then the bank has to give reasonable notice to the customer when the bank wants to close the account. So then there is that is very important. Though the customer can terminate the contract when he thinks, or without giving any notice, when it comes to the bank, it is different. The bank has to give reasonable notice to the customer. Then I have given here a case, Prosperity Limited versus Lloyd Banks Limited. The account could be closed only upon giving a reasonable notice. Account could be closed by the bank only upon giving reasonable notice to the customer. That was decided there. After termination, what happened? After termination of the banker customer, after termination of the account, after closing the account, banker customer relationship comes to end. But the important thing is, second point is very important, but duty of secrecy extend beyond the point where the account is closed. That is very important. Even after closing the account, we can't divulge information of our ex-employees, or rather ex-account holders, customers, right? So that is one thing that you have to remember. Once the duty of secrecy is established or started, it never ends. Even the account is closed, even the banker customer relationship is no more there, duty of secrecy is prevailed. Then does not affect the validity of the customer's claim in respect of the unauthorized debit made by the bank. So that means, for example, if you have done an unauthorized debit, and then thereafter, if you close the account, customer still can claim that money from the bank. So that right is prevail to the customer to sue the bank and recover the unauthorized debit from his account. So with that, I will wrap up the lesson. So this is the second week of the lesson. We completed the banker customer relationship. Thank you very much for your participation.